Hello, hello, hello. What's going on, everybody? Welcome now. Stock Trades. How's everybody doing today? Hope you're having a wonderful start to your Friday. Let me go ahead and Okay, we're good. The microphone's working. I'm currently in the golf course, just enjoying myself. Uh, Let me just go ahead and just see if I can show you around here. I'm going to have to do a couple things here. I'm not too sure how this will be done without screwing up this computer here. Let me see what I can do. So let me just kind of put you here, and let's see what we can do here. We can't unplug the mic, right? So we'll unplug the computer screens, shall we? We'll unplug those. Okay, we're good. We'll unplug the power source because I'm on the computer, and we'll show you around real quick, real quick, real quick. One moment. Okay, okay, okay. We got the whole golf course to ourselves. I don't know if you can see the beautiful mountain view here. Well, so this is the golf course. Make sure we send this out here. I'm going to reconnect now the computer screen so we can do our due diligence. One moment here. Okay. All right. All right. Yeah. So connected it. Did it mess up things up? Okay. I think we're still connected. Okay. All right. We're good. All right. So first things first. Yeah, we're at the golf course right now. This is a beautiful golf course that my father-in-law owns. He went ahead and purchased it, and it's a wonderful place. We'll be having our what you call it, our summit here. Uh, this is a wonderful place, beautiful golf course, and I think it'll be a wonderful place to have a summit where we'll be able to talk stocks, talk about covered calls, cash secured puts, and just really be able to enjoy ourselves, play some golf, and really have a wonderful time, right? And this will be open to lifetime access members, and we'll have a wonderful time. Okay, so uh, without further ado, there's a lot of stuff in the market we have to discuss. Let me make sure because I unplugged some things. We're good. All right, let's see what's going on. What's your question for Toy? Oh my God, that is a good question. I have a question. I went ahead and uh, I sent mine in. Let me see. Here's my question. I'm gonna you guys know it. I mean, I've already asked it, but here's my question. So I'll put it up in the docket so we can talk about it. What's going on, guys? Friday night specials, bottoms up. Oh yeah, face today because I got the laptop. Um, Goals. What's going on? Excellent, guys. Okay, so without further ado, let's do some stuff. Before before we start, let me go ahead and give a shout out to Gun Show Trader for talking to Clover Health and pretty. Oh, by the way, for some reason, my I was playing rock and roll with my dogs, and what I did was my voice is gone. I took a the paper towels, how it has a little thing. Um, I shouldn't do that again, but Jesus, so I had a thing where I act like a rock and roll guy, and I was just singing with my dogs, and I kind of lost my voice. So I don't, it is what it is. But yeah, so there's that. That's why I have my voice is gone. But let me see here. Shout out to Gun Show here because he for folks that don't know, if you click on this form right now, you'll be able to ask a question for Clover Health, and I went ahead and did that, and he went ahead and helped facilitate this. So shout out to a Gun Show for that. We're building a wonderful community, and I think it really is a great. Right now it may not feel great, but ultimately in the next 5-10 years it will be great. So there's that. So I wanted to just kind of just make sure I get these off here. Okay, so we talked. Okay, so we're going to be talking about a couple things right now in response to the stock market. There's a lot to talk about. Okay, guys, a lot to talk about. The bottom is in. I believe the bottom is in, and I'm going to explain to you why the bottom is in. So this is an important video. Okay. Uh, so we're going to talk about that. We're going to talk about all of these, this due diligence, right? All of this due diligence. But very quickly, I went ahead and this is the question I asked of Andrew Toy, and I hope that they answer this question. So my question was, CMS's final Medicare Advantage rates for 2026 landed at a notably higher average increase of around 5.06%, resulting in an effective growth rate of exceeding 9%. So a substantial upward revision from earlier proposals. In Clover Health's Q4 of 2024 earnings call, Peter, the CFO, mentioned that a significant portion of the new member growth heading into Q1 2025 was composed of switchers, individuals for whom medical data is already available, thus creating a strong immediate revenue base, right? Given this context, from first principles, from a first principles perspective, could the higher reimbursement rates across the industry slow down the disruption curve that Clover Health has been benefiting from by making incumbents financially stronger and more competitive? More specifically, do you anticipate that this broader uplift in rates could reduce the magnitude of the strategic tailwind Clover Health has experienced, thereby potentially moderating future revenue acceleration? Additionally, how should we think about this dynamic in light of possible star rating revisions and their impact on the competitive landscape? So that was my question. So I just wanted to share that with you guys and hope that was helpful. But the big thing, okay? So without further ado, let's talk about the stocks. So we're at a turning point now. We just had a recent spike in the VIX to yearly highs, and VIX is normally known as the fear gauge, and it has fallen down sharply. And it has now found some support in the low 20s, right? Suggesting that we might see a little more downside, but overall, markets could continue to make short-term gains, especially this is the fourth day that we've been in the green for the overall global, S&P 500, right? It may not be for Clover, right? But for the overall S&P 500, and I'll be more, we'll go ahead and dissect that out, okay? So April 7th, let me just kind of remind us and bring us back to kind of what's has played out. So April 7th to the 9th, we got some market turbulence, right? Remember, give or take a day, market experienced a significant drop, something, that Trump called Liberation Day, right? Right. So by April 9th, political efforts like actions from President Trump at the time helped stabilize the market and prevent a deeper sell-off. In fact, I call this the Trump put, right? Many folks on Wall Street call it the Trump put, right? There's a Fed put and there's a Trump put. We saw the Trump put get activated. On April 15-ish, 14-ish, the VIX dropped below 31, right? So that is a significant level. Remember, when the VIX spikes above 50, it usually signals peak fear, a time when smart investors should be greedy when others are fearful, right? So the third thing is the earnings report. So what does that tell us, right? So Tesla's earnings report were poor, right? But interestingly, the stock still rallied, right? And for folks that haven't monitored it, just to save you the quick Google, let me just kind of show you here real quick, right? Tesla today is up 9.8%. On 5 days, it's up 23%, right? So it literally significantly, sharply increased by 25%. And obviously the effects of Liberation Day, it's been up now 28%. So even though they had terrible earnings, the stock still rallied. So this shows that much of the bad news, like tariffs, worries, and recession fears, had already been baked into that price, meaning the worst case scenario was already baked in, right? So there's that. So also Google, right? Alphabet, right? Just reported excellent earnings, and the stock surged nearly 10%. Strong results like this gives me confidence in the market, right? This whole capex that Google's spending, it's showing me that this AI revolution is not, it's pretty much not over, right? And if you have any questions, This is a perfect time for you guys to go in the comment section and ask. Okay. Again, this is a learning format. We're going to be going ahead and in the next 48 hours, I'm going to be announcing when I'm going to be doing an internal communication live for people that are on our Discord, where everyone can join. You can turn on your cameras or not. We'll all be able to ask questions more on a personal level, and so we can showcase how you can use the the premium stock terminal. In fact, I might just do the shout out now. We just opened a triple dragon channel. Perhaps maybe we can just go over those, go over those channels and just in real time, just what does this company do? What does it do? And all these things, and just, see, how to understand, just kind of look at the fundamentals of it, right? Maybe I think that'll be helpful. Um, like new companies, right? So something like that. Okay. So this, what else? Oh my God. Okay. This is very important. Okay. So a major signal just triggered. It's called the Zweig Breadth Thrust. It triggered on April 24th. Ladies and gentlemen, we've talked about this trigger and thrust for many times. It's something that we've discussed in over our 800 plus videos, and we've discussed it in strategic times. And you may ask yourself, how did Al know the bottom in 2022 and 2023? How was Al able to figure this out? Okay. Um, it's one of the indicators. There's a lot more, right? One of them was the Zwig breadth thrust indicator. So what is this thing? What is it, right? So let's teach, right? Let's teach, right? So breadth is equal to advancing stocks divided by advancing plus declining. So advancing is on top, divided by advancing plus declining. So when we work that equation out, we then take the 10-day moving average to smooth out the data. Okay. A buy signal happens when the indicator falls below 0.4, showing extreme overselling, then rises. And this, by the way, this will all be part of the Lifetime Access educational panel. And then soon we will incorporate this thrust indicator inside the Al Stock Trades terminal. So you'll be able to have that, and not just have it for the S&P, have it for any stock you choose, right? So that'll be the telling you where we're going, which is why the stock terminal is expensive, which is why we increased prices. This is very expensive. Okay. So what else? What else? So yes. So then when the thrust indicator rises above 0.615 within 10 trading days, it shows a surge of positive momentum, right? So we just did that, right? So let's talk about the historical success of this, because this is important. So since 2000, this signal has triggered less than 20 times, and each time the stock market was higher after 1 month, 3 month, 6 month, and 12 months. That it had a 100% success rate if you incorporate itemizations after 1980. If you include before 1980, it's a 92%, 95%, right? But after 1980, 100%, aka it's above 90%. Okay. And I think it's 100% after 12 months in all time periods. Okay. So where are we now? So we previously talked about the needing of the market to reclaim the 5,500 level to confirm that a bottom may be in, of a 50% retracement from the peak to the bottom, with a 50% retracement back up. Right now, based off of when I was, writing this and doing the due diligence for the Research Edge section, we are at 5,525.21, which is above our target, suggesting that the worst of that downturn is likely behind us. So what does this mean going forward? Based on current data, it looks less likely that we are in a painful L-shape recovery, reverse L-shape, where the market stays down, consolidates, and then rises up. Actually, there's a now higher chance that we're actually in a V-shape recovery. It's going to take us some time, And I think by May and June, we'll start seeing this V-shaped recovery start taking place. And the latest would be in August. And potentially through different types of analysis that a lot of technicians use, we may get some general weakness. And then the Federal Reserve, hopefully in the latter half of Q3 and Q4 of the year, they'll cut interest rates 2 times, which will cause the stocks to hopefully rise. So this is very encouraging. I'm very excited. This is very good. And ultimately, I expect that in May 6th, Clover Health, when they announce earnings, given that a lot of stocks are doing really well right now, I think Clover's going to do really well. And I think the stock will go up higher. So with that, let's go ahead and do some analysis. So again, guys, very quickly before we talk about this, again, guys, this is not rocket science. It's pattern recognition. I've been doing this for now. Soon it's going to be for over 14 years. I'm about to hit my 15-year mark, which is insane. Wow, right? Wow, right? Can you imagine? It's going to be 15 years, and you start seeing these patterns, and once you start seeing the patterns, you get less scared. In fact, we had someone just message me earlier today. Shout out to you, Rick. You were saying that, I feel like now I'm an intelligent investor by using the software. I don't feel as emotional. And I think that's half of the battle, if not more. A lot of it's emotional, guys, right? It is, it really is the case, at least in my opinion, right? So this is the historical levels for volatility using 5 academic models. Shout out to Sentiment Trader for this wonderful research. So as you can see here, in terms of the VIX here, the last time we had some elevations of the VIX, it was Black Monday, global financial crisis, COVID, and tariffs. And these are historic extremes, and tariffs was one of them. And if you were to analyze these extremes, whenever the VIX is above 50, you really make a lot of money if you were to buy at these extremes. In fact, if we were to take these signals and any signal where the VIX crosses instead of above 50, if the VIX crosses above 40, you can see that the green is the signal dates that are positive and red is negative. And you can see out of the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14% of the time, 2 of them were negative, while the rest were positive. Obviously, this one was the great financial crisis, but then we had another signal here, but it was still near the bottom. And obviously, this one was smack back at the top, which is the dot-com bubble, which obviously you could have protected yourself if you knew what fundamentals are. Because someone designed pets.com, people rushed to, like, that stock went to $1 billion evaluation, and they never sold one treat. They never sold one damn treat. Okay. And so that's what I'm saying. You got to take technicals, macro. You got to look at all this research, and you got to conglomerate it together into something meaningful, right? And that's what this all is. It all comes together for something meaningful. Okay. All this, you can't just look at one thing, because if it was that easy, everyone would be rich. Okay. That's the whole point of the community that we have. You have people that have over $44 million of net worth. We're all inside together, and we're all looking at it from different perspectives and lenses, and we challenge each other. Okay. And it's important to be direct. Okay. It's important to be direct, no fluffing, and just say it how it is. Okay. So it's very powerful to do that. And that's the culture that I want to build. Okay. I like being direct. All right. So the last time we basically had this type of volume up, it really signifies a great time market bottoms. You could see kind of all the way from 1980. You could see, we're nearing a market bottom. And if you look at the breast thrust indicator, it usually historically is near market bottoms. Guys, listen, this is the COVID-19 pandemic, guys, right? And it was activated. Imagine if you had access to someone who understands this, right? Someone who's able to take the signal from the noise. There's a lot of noise out there on CNBC. Everyone's trying to make you feel something, right? Everyone's trying to, make you dumb money. And the point is, I'm trying to teach you how to be smart money. Okay. So there's that. And then if you look at the breast thrust indicator and look at the 1 month, 2 month, 3 month, 4 month, 5 month, 6 month, and 12-month return, you could see that as we go longer, and this is incorporating um, all this breast thrust indicator since 1928, right? When your great grandparents were alive, right? This is the date. This is how long we look. This is how long I look to, right? Because I want to win. I want to win. I want to eat meat, right? I want to win, and I want you to win too, because I'm tired of the 9 to 5 bullshit. I'm tired of Americans working their ass off, and then by the time they get to their retirement, some of them don't even make it. Some of them freaking die, right? I want you to enjoy your life now, okay? So you could see this from all this data here. You could see that as we progress outward, and if we remove this, it becomes 100%, right? Because remember, here we did not have the Federal Reserve, right? Here we did not have the government stepping in and bailing out the economy. So obviously, this is the percentage positives is going to get higher. But if you go, 1 month out to 12 months out, we're looking at positive 18% gain. A positive 18% gain with a Z score that is 3 standard deviations above the mean, ladies and gentlemen. Likewise, look at dumb money. Dumb money's coming back. Dumb money's coming back, and what does dumb money do? Dumb money buys when stocks go up. Smart money buys when stocks go down. That's just the fundamental difference of how this works. Individuals, for all of you folks that are wanting lifetime access, we do have $1,200 off coupon code SAS, SAAS, subscription as a service. I'm very bullish on this, and you guys already know. Okay, this is a big sale. Take advantage of it. It'll include lifetime access for all the stuff we offer regarding the premium stock terminal, Discord, over 2.5 billion outputs of institutionally graded data. So we talked about the fundamentals many times. We talked about all this. I mean, all this stuff here has been talked about in ad nauseum. My favorite part about this whole thing is we have a lot of investors now, more than we ever had before. Number of shares, they're buying more shares now, and we've broken out of the normal context. The total number of invested now is at $292 million, and it's going to be increasing shortly. We're going to see it every 3 months. The ownership percentage just broke the trend line. Increase in positions has broken out of a point last seen since 2020 and 2021. We are entering a new cycle. We are entering a new bull market cycle, ladies and gentlemen. By having access to all this information, you can see ultimately there is no point of getting emotional. When you have access to this information, there's no reason. If we go ahead and take a look at Clover, and I do believe it will be a free cash flow generating machine. If we grow them at 250, and let's say this disruption curve continues and the growth rate is 25%, I can confidently say that in the next 10 years, I would be surprised if Clover is not above $32.97, right? If we go ahead and take a look at sentiment analysis right now, and if you look at the past 3 months, you could see, or let's call it 6 months, you could see we've dipped up and we've dipped really down in the negative, and now we're consolidating, and now the sentiment is neutral. They're waiting for earnings. But here's the different part, ladies and gentlemen. We already know they're going to be growing more than 37% because we've done the hard work. We've done the due diligence. We were able to look at the whole thing. We know what's happening. The only question is, can they still grow at this rate and still be free cash flow positive? Likewise, let me show you something, and then we're going to end it here. Look at the market sentiment intelligence. As soon as smart money became bullish, after 6 quarters, Palantir did a moonshot over $100. 1, 2, 3, 4, 5, 6, 7. Literally 7 quarters, moonshot. You could call it 6. Look at Clove. It's been 2 quarters. 5 more quarters, and we are about to get into a moonshot territory. Now the question is how long is 5 quarters? Well, every quarter is 3 months. So it's about 1.25 of a year. So we can go ahead and just add this right now and just talk to just chat GPT and say, from the current date right now, how many quarters, if I'm looking forward into 5 quarters, which is each quarter's 3 months, when will that be? And the answer is July 25, 2026. Ladies and gentlemen, this is the most clearest investment that I've seen in a long time. We were able to buy at book value levels, and a lot of millionaires are going to be created. I mean, we already have created many, but a lot more will be created. I hope you enjoy your Friday. For individuals that are interested in securing lifetime access, the pathway's there, and it's, as of now, incredibly affordable. I appreciate you all. God bless you all, and I'll see you on the next one.